One of our philosophies on the acquisition side is to provide brokers very quick feedback when they show us a deal. This is really valuable because we've developed a reputation amongst the brokers in our markets that we are consistent, we are responsive, and that when we provide feedback, it's not only quick, it's also actionable. And what that means is that they know that they can take that number to the bank because when we provide a number, we're very serious behind it. And that's great. And a lot of other firms can do that too. But the speed that at which we can do that is very valuable because brokers want to collect data when they take a deal to market so that they can share that data to their seller and say, hey, here's the offers I've gotten so far. This Lone Star Group, they may not pay the most, they may not be the most aggressive, but we know that this is a real number. So this is a real fair indication of the value of your property. So that philosophy has served us really well because as we've developed this reputation and these relationships, brokers tend to like sending us deals, and so they send us more deals. And really, the key in our business is to get first looks, last looks, second look, as many opportunities you can to get at a deal is super important. And actually, if you look at our historical acquisitions, the most common theme that you'll see as how we were successful is we bought the deal, not necessarily off market, which we've done a lot, but it's more so hanging around the hoop. So we participate in the bidding process and we get outbid by another buyer and they go with that other buyer, but then the deal falls out of contract or never makes it to contract. And so then the seller and the broker are scrambling to put the deal back together. So at that point, they're a little bit burned and they're looking for a more stable, a more sure thing. And as we've built up our reputation in the market, brokers are calling us when the deal falls apart and saying, hey, this deal just came back on the market. I know you were bidding on it earlier. You were a million or two shy before, but now the seller is ready to make a deal at a lower number. And that's when we're able to quickly step in and make a deal that's great for everyone. We're obviously providing a solution for the seller, and it's great for us too because we're able to get the deal at a lower price, which is helpful for driving better returns for our investors. So I don't know if many people think about it or realize all the work that goes in to actually getting a deal under contract, because it's not just about underwriting and analyzing the deal and then putting in an offer and then participating in the bidding process and doing a buyer interview call with the seller and presenting ourselves as the best option for the seller. There's also another element of patience, unfortunately, and that's patience is tough in the acquisition space because acquisitions is associated with hard charging, aggressiveness, being confident, and winning deals. But you have to balance that with the patience of being able to let a deal go, and maybe that deal will come back around, or maybe it'll be gone forever. We've passed on a deal thinking, yeah, it probably will come back to us, but then it gets closed by another group and we don't see it again. But thankfully, we've had great success with having a deal come back to us after it fell out of contract, which only puts us in a stronger position to be able to lock the deal up at a better price and perhaps better terms. So in reality, when you see a deal from us, it's not the first deal we looked at. We've probably looked at 50 or 100 deals, bid on all of them, because that's the thing. We don't do any back of napkin analysis and rough numbers. Every deal that we look at fully. We underwrite it completely, and we give that thoughtful feedback back to brokers. We don't just pass on the deal or we give a lowball offer. We will offer and we will explain how we arrived at that price. So we're good about providing that market feedback, which again ingratiates us with brokers. And then the other element is the speed aspect. And speed is really important, obviously, because everyone wants to move fast, and deals, they move fast, especially good ones. So you want to be able to jump on it opportunistically. Because we're a small company, we don't have multiple investment committees and an analyst who then reports to the director, and the director needs to go to the CIO and have a meeting with the CEO. None of that. We are small and nimble, so we're able to move quickly and confidently, which is definitely unique in the space and allows us to stand out with the brokers.